think silver's on the way now. Silver had to wade through a lot of hate. There's no hate that is as severe as the hate of a jilted lover. And there was about 1 million jilted lovers on Reddit who came to really truly hate silver. But we've worked through that hate now, I think. Gold price doesn't just go higher, it goes substantially higher. And if you're a student of history, which teaches you that when the gold price moves, silver moves later, but further and faster when it moves, then speculating in silver stocks is a highly intelligent decision.
The price of silver opened at $29.09 per ounce on Wednesday, up by 1.92% from Tuesday's prices. The upside rally continued, with silver bulls targeting $30 per ounce. While the white metal did not hit the long-awaited milestone, it hit a peak of $29.82, the metal's highest price since January 2013. Silver prices are up by over 30% since the rally started in February, and experts expect prices to increase further, possibly hitting new all-time highs before the year ends. According to Rick Rule, a renowned credit analyst, seasoned investor and founder of Sprott Global Resource Investments, silver has successfully moved from being a most hated metal to a generational play, offering potential for high returns. Rule's conviction in silver, gold, and other metals is not just because of the recent price rallies, but also because of gloomy global macro conditions. In a recent discussion with the Money Levels show, Rule highlights important developments, especially in the Chinese investment scene, which he says will contribute to significantly higher prices for gold, silver, and copper. According to the latest report from the World Gold Council, about 131 tons of gold were withdrawn from the Shanghai Gold Exchange in April, 7 tons higher than the previous month and 10 tons higher year over year. Physical gold investment remained strong through the month, despite the rising gold price, indicating that investors are seeking value preservation through the commodities market, offering stability in uncertain times. Chinese gold ETFs also continue to see strong inflows. According to the World Gold Council's report, the ETFs attracted $1.3 billion in April, the strongest month on record. The combined AUM of the ETFs has reached another historical high of $6.4 billion and is expected to climb even higher in May. We will present clips from Rule's interview, but before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thank you, and enjoy the video.
The Shanghai Exchange is effectively destocked, which is to say that the float, the inventory, has been bought by private citizenry and by the Chinese central bank. It's important to note that the move in the gold price, Daryl, that we've seen in the last 2 years, 2.5 years, from $1,800 to $2,300, has been accomplished without retail buying in the West. If you look at the statistics of the physical gold-related ETFs, what you will see is that Western retail buyers, European and North American retail buyers, have been selling for 2.5 years, while foreign central banks have been the buyers. There is retail buying of gold in China, in Korea, in Taiwan, and in India. But the primary drivers of the gold trade have been foreign central banks. They've been doing it, I think, not so much in protest to U.S. fiscal policies, although partially that has been true, but rather because of the weaponization of the U.S. dollar. Whether or not you agree with U.S. foreign policy, the decision to confiscate $300 billion worth of Russian holdings of U.S. treasuries has caused other foreign governments, whose relationship with the United States is occasionally called into question, to wonder whether they should hold U.S. treasuries. In particular, that causes some disquiet to the Chinese, who are large holders of treasuries, and has caused them to begin the process of selling their U.S. treasuries and buying gold. I would suspect, too, the second challenge for foreign holders of the U.S. Treasury has simply been the arithmetic. The U.S. government absolutely promises to pay you 4.3% a year for 10 years on your U.S. Treasuries, and they will, even if they have to print it. But I would argue that that currency is losing purchasing power at 7 or 7.5% compounded. I know the government tells you it's 2.6 or 2.7 in the CPI, but I would argue that any rational human being or any rational government that looks at the increase in food prices, looks at the increase in energy prices, looks at the increase in manufactured goods prices, looks at the increase in construction costs, would understand that the real deterioration in the purchasing power of the US dollar is more like 7.5%. So on the Treasury, which the government is asking these foreign governments to buy, they're paying them 4.3 in a currency where their purchasing power is declining by 7.5. In other words, they're losing 4% of their purchasing power compounded every year for 10 years. In addition to the fact that they're afraid of the US government, that makes it a lousy investment. I suspect that that same realization will hit true for Americans. Think about your own income statement and balance sheet, Daryl. Think about whether the basket of goods and services that the Thomas family consumes on an annual basis is actually rising in price only 2.6 or 2.7%. Ask yourself what's happened to your gasoline bill in the last 4 years. Ask yourself what's happened to the clothes, the price of the clothes that you buy for your son. Ask yourself what has happened at the checkout counter in the grocery store over the last 4 years. And ask yourself whether your cost of living has actually gone up 2.6% a year or some higher number. And when you arrive at that higher number, subtract the 4.3% that the Treasury purports to pay you for a US 10-year Treasury, and tell me whether or not that seems like a good investment to you. If the answer for you is the same as the answer for me, which is to say no, you need to begin to do something about it.
Americans are losing power purchasing rapidly because of the constant debasement of the dollar. Yet, there is no hope that anything will or can be done to improve the situation. According to official data from the Treasury Department, the U.S. national debt currently sits at $34.740 trillion. While this in itself is quite scary, Rule points out that it is not as scary as the off-balance sheet debt and future obligations. The Congressional Budget Office estimates these unfunded liabilities to be well over $100 trillion. The future generation will have to pay for these liabilities and others with their earnings, while possibly foregoing their retirement benefits. Rule advises that younger people should begin preparing for this harsh reality by adopting disciplined financial planning and incorporating assets like gold into their portfolios for stability. During his interview, Rule discussed the importance of investing in other metals, especially copper and silver, which he predicts will soon experience severe supply shortages. Let's get back to the interview.
Your risk in copper is simply a global recession. I'm not saying we're going to have one. I'm not an economist, right? I'm a loan shark. Absent a recession, we're going to have really severe copper supply shortages in 5 years. You can have supply shortages if a recession reduces demand and still not have the price go anywhere. But if you are of the opinion that a recession's not in the offing, then you almost have to buy copper. And when I say buy copper, you don't have to buy the penny dreadfuls that are exploring for copper. You can buy the BHPs, you can buy the Freeports, you can buy the big companies that are paying very generous dividends. If you're getting paid a 6 or 7% dividend, you don't have to wait for the copper price to go up to be happy. You can be happy next quarter because you get a check. It's important that you understand that. There are a range of large copper producers that even at today's prices are making a lot of money in the copper business. And they're kind enough to return some of that money to the owners, you, by way of dividends. So I absolutely, positively would encourage your listeners that can afford to invest before they speculate in the copper business by buying some of the largest copper producers in the world and pocket that generous dividend while they wait. I think silver's on the way now. You know, silver had to wade through a lot of hate. There were a lot of folks around the silver squeeze 2020, 2021, who sort of believed that they could, with their individual efforts, change the nature of the silver market. That didn't work so well. They ran into Wall Street, and Wall Street had them alive. And there was a lot of them. You know, there's no hate that's as severe as the hate of a jilted lover. And there was about 1 million jilted lovers on Reddit who came to really truly hate silver. But we've worked through that hate now, I think. You're seeing the silver quote start to move up. And you and I discussed on your show before for the last couple of years that in prior bull markets, gold had to move before silver did. When the momentum was established by gold, eventually it would come to silver and then to the silver equities. We're seeing all that happen. The silver stocks, be they junior or senior silver stocks, have had 2 or 3 pretty good months. It wouldn't surprise me to see them take a break. It wouldn't surprise me to see them have to stop to catch their breath. That's normal and natural for resource bull markets. But if you believe, like I do, over the next 5 years that the gold price doesn't just go higher, it goes substantially higher, and if you're a student of history, which teaches you that when the gold price moves, silver moves later, but further and faster when it moves, then speculating in silver stocks is a highly intelligent decision with an amount of money that, as you've so bitterly learned, you can tolerate the volatility around. The important thing with silver speculation is patience and nerves. Don't bet more of your net worth than you are comfortable betting. And then understand that when it makes sense to you, you may be 2 years early. 2 years seems like a long time. But if you're playing for triples and quadruples and 5-baggers and 10 years, 10-baggers, 2 years isn't a long time at all. And that's the game that you're playing in the silver stocks.
According to Rick Rule, when investing in precious metals, it is important to have a long-term time horizon and stick to your investment strategy regardless of fluctuating market conditions. We are in very uncertain times. The economy is showing more resilience than everyone expects, yet government debt continues to spiral out of control, and there will be more uncertainties and chaos ahead. This is why investors like Rick Rule are advocating a return to trusted hard assets like gold and silver that have stayed true to their fundamentals for centuries. What are your thoughts on Rick Rule's interview and his analysis of the current economic situation and market conditions? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.